Welcome back to ABG Investor Day. My name is Simon Jönsson, an equity analyst here at ABG, covering gaming and IT. And with us now we have the CFO of Rovio, René Lindell. And with that said, I leave the floor to you, René.
Thank you, Simon, and good afternoon to everyone. So happy to be here today presenting about Rovio and a bit about what we do and how we've done lately. So if we move forward, Simon, to the overview slide, which is the next one. So Rovio is a mobile-first games company. We've been around as long as mobile gaming has been, and even before mobile gaming became a huge thing. Mostly known naturally for Angry Birds game that came already in 2009. So we had our 10th year anniversary a couple of years ago, and if we look at what we've been doing over this couple of decades almost already, we published more than 50 games, and 5 of our games that we published have done more than 100 million euro in lifetime revenues, and you can see some of those Angry Birds games here. We have a very large audience base. Over 6 million, almost 7 million daily active users. We had over 5 billion downloads for our games to date. So let's move forward to the next slide. So overall, I want to talk about a few things and foundations that we have as a company that we build on and that we think are going to make us even in a better position going forward. Firstly, of course, the Angry Birds brand, which is a very unique brand, one of the most known brands in the whole gaming space, mobile space, and also one of the most known entertainment brands in the world. And of course, this is something that we cherish and of course use in the majority of our games and beyond games, even in movies, in animated series that are found in principle all the major channels across the globe. We have a reliable game portfolio of games that have been in the market for some time already. We are typically releasing also every couple of years something new, which then becomes part of our long-term game portfolio. And we have a very interesting pipeline also when we look at the future. All of this is based on having very talented teams that are really masters in their space in mobile gaming and in the chosen genres where we are. So we are mostly doing games in the casual space, which means casual games, puzzle games for broad audiences and utilizing brands and the Angry Birds brand, of course, being the most important one. And one of the things that have become even more important over the last few years is the technology platform and publishing platform that we built that we call Beacon, which includes all the technology which is behind those games that ensure that they do run 24/7 without issues, and basically that allows us to launch, scale, and operate games reliably and releasing the creative time for the actual game development teams to do the best possible games they can. And of course, Beacon then being also one of the things that we hope to scale and utilize as we become bigger as a company, as more studios join Rovio. And final piece is we have a strong financial position and which enable us to invest in growth opportunities and ensure a good healthy financial structure for our owners. Let's move to the next slide. If you look at the studios we have here today, we have grown over the past few years to have 7 game studios in our family. Our historic foothold is in the Scandinavian countries, so Finland, where it all started, and then Sweden in Stockholm, which was the second studio we founded, the second country, and these two are the largest studios, with Espoo focusing on both puzzle games and then casual strategy games, and then Stockholm being what we call advanced casual. And the biggest game that the Stockholm studio is working on is Angry Birds 2, which is our main follow-up to the original Angry Birds, and which is our biggest game today, and then largest generator of profit as well. And we have been expanding our studio base both organically, or mostly organically, but also inorganically. So some new organic studios that we created in Canada, in the cities of Montreal and Toronto, are quite new in our space, and then a couple of studios that we have acquired, one in Copenhagen, doing casual RPGs, and then last year we acquired Ruby Games, a hyper casual gaming company from Turkey, in Izmir. And all of these studios have the principle of being what we call genre masters in their own space, which means that they are focusing on certain type of games where they really are trying to become the world's best, or are already the world's best at that genre. And it means that they keep on doing similar type of games, innovating in that space, but all the time learning from previous games, which enables them to move forward all the time in their mastery, and enable to release better and more successful games. That's a core principle that we have in terms of how we operate our studios and manage the talent across the company. Next slide, please. Now, if we look at our games portfolio, which already mentioned that it's reliable and it's strong, and this kind of shows the breadth of games that we have today, and also how we look at these from a game life cycle perspective. So we like to divide the games depending on their life cycle into grow, earn, catalog, in our main free-to-play games, and then we have hyper casual games as a special category. If I start from the top, grow games, which we call grow, are games that are really quite recently launched, like here Angry Birds Journey launched in January this year. This means that they have been scaling up this year, and we have used quite a lot of marketing investments in these games, and that means also that the games are not necessarily profitable in the year they're launched, but they will become profitable in the coming years and part of the portfolio. The earn games are games that we have scaled up to a significant size, and they are in a way stable, that from the marketing perspective, that they already generate a big part of our profit. And for example, here highlighted our 3 top games, Angry Birds 2, Dream Blast, and Angry Birds Friends, which just those 3 games jointly generate almost 100 million euros of profit every year, and it's quite stable over the years, even though you might see fluctuations in any quarter in revenue or the user acquisition spend. When you kind of average that over a few quarters, you can see that it's actually quite stable. And the catalog games are games that are not maintained as actively anymore. They have very low operating expenses. They might be operated by an external partner, and they have very high profit margin. So this is the end of life cycle that can last for a very, very long time, even 10 years, and generating positive cash flow. And then we added the hyper casual category last year when Ruby Games entered, because these are games that have typically very fast life cycle. They can go through all the grow, earn, catalog phases within a space of a few months, and that's why the release cycle of these games is much higher, and also the lifetime typically is a bit lower as well. So let's move on to the next slide. I mentioned Beacon as a growth platform, which has become more and more important during the last years, as there are more technological platforms that we need to take into use. There are more kind of different analytics and data science methods that needs to be taken into into use, for example, in the marketing. And this platform enables us to quickly identify, analyze, implement, and roll out those implementations across the whole portfolio very quickly. So if we see something working in a game, or someone is ahead of the curve in terms of implementing, then once that is tested, we can quickly implement it in the rest of the games, because every of our games run the Beacon platform. So the same software foundation is there, and every game team uses it because it's just very easy and practical to use. And I think we also seen kind of clear results of this as well. Once, for example, when the Apple ATT restrictions came into place, we could actually very quickly implement that across our portfolio and enable to get a little bit ahead of the curve in that space. And that's the purpose of having really this central tech and knowledge platform for our studios to use, and any other studio that joins the family to for example, acquisitions, then they have the benefit also to utilizing Beacon. We started investing this already 11 years ago, and so there's a lot of work and investments gone through this, and it's not something which is very easily kind of copied or taken after, but it actually it takes time to build this kind of knowledge platform. Let's move ahead to one slide. Sustainability is very much at the core of what we do, and we carefully chosen a few areas which we think are relevant for the gaming space. Naturally, the safe, responsible gaming is directly related to our players and players of all ages, and this is something where we are very active internally and with external partners to ensure that Rovio games are safe environments for players of all ages. And people and society, important area for us. Of naturally, this is a people-driven industry. Where really it's the people that matters, the talent that makes the game, and this is one part of it, but also having a positive impact on the people around us. And the third piece where we really want to be more an advocate and a voice out there is the climate and environment. As the mobile gaming industry in itself, and as we are content developers, we are not generating directly that much of CO2 emissions naturally, as this is a very energy efficient and low carbon way of entertainment. But still, we think with our audience and our reach with the brand, we can have a positive impact on at least we try to have as much positive impact as we can have on the overall push that we have globally towards sustainable environment. Let's move forward to our latest financials, and we can go to the next page. So if we look at the last years, we had a quite stable top line in terms of revenue, and EBITDA has been at a very healthy level of around more than 15%. And in the last 12 months ending in Q2, we can see kind of a return to a growth path. So we grew last 12 months 15% compared to the previous 12 months. And this growth is mainly for our games business. We do also have brand licensing, where we have a different kind of licensing for the Angry Birds brand, but that has been of a less important focus for us going forward. So the main focus of the company is to develop games and launch games, grow the games, and then from a licensing perspective, we see there's an additional nice auxiliary business, which is highly profitable, and also it's a good fan treatment to reach all those Angry Birds fans across the world and increase the brand awareness. Also, and keep that at a high level, which again helps to find our games and also find a lot of what we call organic downloads. You can also see the last 12 months profitability was a bit higher than the previous months, reaching almost 20%, and we also have a high cash conversion, as you can see by the dark red color here, the cash conversions being ranging from 60 to almost 90%. Let's move on to the next slide. Looking on a quarter-on-quarter perspective and on a game-by-game, just to really the latest figures on how our games are doing. You can see the last 3 quarters here being quite nice level increase compared to some of the quarters before, and there's a few reasons of this. One is, of course, the acquisition of Ruby Games in the hyper-casual space, which kind of added that new genre and that new growth vector to the portfolio. And also the addition of Angry Birds Journey, the latest Angry Birds game, which came out in January this year. And also the rest of the portfolio has been doing quite well, with Angry Birds 2 having a really strong last 3 quarters as well compared to the year before. And let's go to next slide and look at the financial position and the balance sheet. So as I said, we have a strong financial position. We have a strong cash conversion. It's very steady, and we generate a high degree of free cash flow, as can be seen on the left-hand side graph. So we have a good balance sheet for future investments that could also involve acquisitions. And if you look at our balance sheet, it's mostly we don't have any debt. So the balance sheet is basically cash, and then we have some contingent liability related to the Ruby Games acquisition, where we purchase the company in different tranches. And let's go one slide forward. So lastly, I want to just end with the outlook for this year, where we do see that we are on a strong growth for the full year ahead. We expected that our profit will be a bit lower this year than last year because of the investments that we did for growth. As typical in mobile gaming, when you grow a new game, you do invest in the marketing upfront, and you take all the costs during those investments period, and you recoup that over time. That the investments turn into top line and it turns into profits. So that's why we estimated already in the beginning of the year that this year will be a bit lower profit than last year, which had a very high profitability compared to history. It's also good to remember that was also a very high profit year. And then during our Capital Markets Day, we updated slightly our long-term targets. The faster the market revenue growth is the same target as we had before. That's still what we aim for. And this includes, this is of course our organic growth, which means that it's based on Angry Birds, our current portfolio, our current studios, but also if we acquire new studios, those also have a target to grow organically over year on year. And in terms of profitability, we look at our absolute level of EBITDA, which is very much related to cash flow, and over time we want that EBITDA to grow in line with the long-term revenue growth. So with keeping in mind with those fluctuations that when you have a strong growth from user acquisition, that you invest in new games growth, that always momentarily drops the profit, but then it recovers when you are again reaching a more stable state with a game. And we have been paying dividends every year. As I said, we have a quite stable cash flow over the years, so we keep the same target of paying out 30% of our adjusted net profit in dividends, and we have such stable and strong balance sheet that this we see can continue also going forward, while we keep majority of the cash for basically being able to do moves in the M&A space if we see good opportunities to do so, where we can see companies that are close to our heart and where we can see synergies and also utilize our Beacon platform to help them grow even further. I think that's about it, what I had to present today, and I'm happy to take any questions.
Thank you, René. And I want to start off with the UA, the guidance for UA. You guide for 25 to 30% of game revenues, and I was just wondering if you could go, let's say, beyond that, in a case where we have a weaker ad market that pushes down the cost per install, for example.
Yeah, so I think typically the market in mobile gaming is very dynamic, so you don't want to give too far ahead precise guidance when it comes to your profit or when it comes to user acquisition spend. So this is a very accurate kind of Q3 prediction that I think we have in place. Naturally, if things change, then we are always prepared to kind of take those opportunities. And you're right that the user acquisition space has been quite dynamic this year because of many reasons, and we are seeing also some benefits of that. So at least we hope that we could be able to spend even more in a later part this year, but I think it's a bit too early to say that. So we'll come back to that in October.
All right, but just as a quick follow-up, you haven't really seen any change of trend in the UA market. Is that your opinion?
I think no major change, but I think our kind of good performance in some of our key games has been performing. It's been continuing. And for example, the two biggest games, Angry Birds 2 and Dream Blast, I think both have continued from Q2 until up until now in a very healthy pace, and we're very happy. And Dream Blast definitely is seeing better performance than what we've seen in a while. So from that perspective, I think we're quite positive to how the market is behaving at this point of time. So it's always there's always two sides of the coin. So one is the game performance and one is the market. Sometimes it's difficult to say which is which, because you always push your game performance to be better, so you introduce new features and the game improves. And on the other hand, you have the market dynamics as well. But at the moment, we can see very good momentum in our top two games there. But otherwise, the market is in a way very dynamic, and you can see a lot of changes where spend is heading now between different platforms, and it's quite a very interesting situation now overall.
And what do you see in terms of both player activity, but also consumer spending in mobile games in general?
Yeah, I think general, I think which is pretty obvious is that we went through a very high peak in consumer spending activity during the lockdown years in 2020 and then all the way to 2021. And this year there's definitely been a rebaselining in gaming across pretty much all games. However, for Rovio, I think we never saw as big boost during the COVID years, so that also we are kind of less impacted this year by the rebaselining. So I think kind of the stability of the brand, the kind of games that we have and the audience we have has been maybe a bit better than industry general. But I mean, we are feeling there's no doubt some of that as well, that there's a rebaselining now that those lockdowns, at least in the Western markets, are not there, that players are having other things to do as well, or more things to choose from. There are more physical activities as well, and that can be seen then in the also player spending across the board. So I think on incremental, we are still seeing that rebaselining. And I think when we get to Q4 this year, Q1 next year, I think it's going to be interesting to see as basically you kind of start to have your comparable quarters start to be already in a stage where maybe those are already at the baseline. So we are, from that perspective, positive that we're going to see, even in the midterm and of course long-term growth in the mobile space.
So possibly easier comps coming quarters. Just a follow-up on the rebasing and maybe the change in habits for consumers. How does that impact your lifetime value calculations?
Yeah, I mean, it does impact on the margin a little bit. So there's definitely, I mean, if you look at this year, we've seen some lowering of lifetime values. That's something that we see, which is probably this impact of a little bit of you could say overactive market during the lockdowns phases, and then you're kind of coming back. I mean, there has been a steady increase of LTV for a couple of years. So now that you're coming back, I think you take a little bit of step back, but we hope to kind of take steps forward, as said, in maybe the next few quarters. Let's see how long this rebaselining takes. But then on the other hand side, this has also impacted the marketing spend overall in the industry, which means that your cost per installs again also go down. And that's the second piece, because you always try to, of course, have a lifetime value, which should be bigger than your cost per install. And when both come down, you still can keep the same scale. And that's what really matters here, that it's not just one or the other that changes, but both. And of course, especially advertising spends have come down in the industry, and that kind of sees you a little bit shift from ad spending to in-app purchase spending. And of course, for our portfolio, most of our revenue is from in-app purchases, so that's kind of less impacted. But for Ruby Games in hyper-casual space, they of course see a bit more on this impact from the ad spending. That's the main monetization for hyper-casual, and they are kind of impacted from this overall ad spending levels that have gone down in the market.
All right. Thank you, René. That's all we had time for. And also thank you, the audience, for tuning in. Have a nice day.
Thank you all.